talk to Richard Spencer. He's the CEO for U3O8 Corporation. Richard, I've just received your announcement on your metallurgical results. They look outstanding to me. Can you please talk to these numbers for us and help the investors understand what you actually have here?
Tracy, they're absolutely fantastic results. 97% recovery for uranium, 97% for phosphate, and 79% for vanadium. Those are the three principal commodities that we have in the Berlin project. So absolutely outstanding results.
I also understand that your actual extraction process's cost is very competitive. Can you talk to me about this process?
Tracy, it is competitive on the initial work that we've done. It's also very, very simple. It's a two-step process. The first step is literally just taking the ground ore and mixing it in an iron-rich liquid, and that liquid extracts the majority of the metals, and it leaves a residue behind. And we then take that residue and just wash it with hydrochloric acid, with swimming pool acid, that is, to get another cut at extracting the metals. So we extract the metals in two phases, and that's what gives us such outstanding overall recovery.
Results are fabulous. Can you talk to me about the focus of the company?
Tracy, we've got a mix of commodities on the Berlin project. The three principal ones are uranium, vanadium, and phosphate, but there are also some rare earths and other elements in there that these metallurgical tests show that we can actually extract. But the takeaway from these results is that the phosphate and the vanadium and some of the other elements should enable us to produce uranium at a very, very low cost. In other words, the value of those extractable metals probably will pay for the mining of the uranium. So we'll be able to get the uranium out effectively for no cost.
Our observation is that this mix of commodities at Berlin is contributing to a pretty high rock value of approximately $350 per ton based on current metal prices. Can you just talk to me about that a little bit?
Tracy, that $350 a ton number comes from the value of the metals that we can actually extract based on these metallurgical results from a ton of ore at Berlin. So it's a very high rock value, and our mining and processing costs are likely to be significantly lower than that. So where this lands us is that we should be able to extract the uranium more or less for free or at a very low cost, because the other commodities that we would be mining would be paying for the cost of the mining and extraction of the uranium. So we envisage that Berlin will be a very, very low cost uranium producer at the end of the day.
Okay, now I heard the word free, and here's what I'm hearing. If you could just clarify for me, Richard. You've currently got 20 million, you've got a 20 million pound resource. You're talking about extracting the uranium for free. Would this not place you roughly at $1 billion market cap instead of where you're at right now?
Tracy, that's absolutely true. We're due to come out with the first resource on Berlin in the next couple of weeks, and the target that we've stated publicly for that resource is somewhere between 20 and 25 million pounds. Assuming that we're at the bottom end of that scale, 20 million pounds multiplied by a uranium price of about 50 does land you on that $1 billion number, and our current market cap is 40 million. So certainly there's a huge value gap there, and we expect that as we deliver the metallurgical results and the resource, that value gap will start to close.
U3O8 Corporation, it's my understanding that you're focused in South America. Can you talk to me about this, and can you talk to me about the precise logistics of where the Berlin project is?
Tracy, we are focused 100% in South America. We feel that there is a lot of value to be had there, and we're operating in three countries down there. But Berlin in Colombia really is the priority project at the moment. It's located right in the middle of Colombia, and very excitingly, it's about 60 kilometers from one of the main agricultural areas. So the phosphate that we produce from the Berlin project has a market very close to it.
I really think that companies with multi-commodity strategies have a real competitive advantage in the existing economic landscape. Can you talk to me about your focus for the rest of 2012 and what other benchmarks we might be seeing?
Tracy, we also think that the multi-commodity story is a very strong one. I think it's critical for people that are just starting to come back into the uranium space to have multi-commodities associated with the uranium. It spreads the risk a little and should make the company more comfortable for them, or a more comfortable fit. And 2012 is going to be an incredibly exciting year for us. I mean, 2011 was huge. We came up with the first resource on Berlin, and these metallurgical results are the game changer on the project. And this project is the company maker. I mean, we were talking about the valuations earlier, and that valuation is only on one part of the property that we've drilled so far. We've drilled 3 kilometers of a 10-kilometer trend. And so 2012 is just going to be building on this story, doing a little more metallurgy to refine the process, and more importantly, growing the resource, so that at the end of 2012, we should be looking at least double this resource, and hopefully double the valuation as well, or the implied valuation.
Well, you've heard it here first. The Berlin project is going to be a company changer, and we should have a lot more exciting news for U3O8 in the upcoming year.